Okay, folks, good morning and welcome to Swing Trading Today for the 18th. What we're going to talk about today is what's coming up in terms of economic data today, results from yesterday. We'll talk about the pre-market activity, and I'll take some stock chart requests. First, I need to go with what the members submitted on the members area. And then if we have a few minutes, I'll take some requests from the audience. I'm only going to be on for a half hour today, but I will be on tonight. It's Thursday. That means it's Thursday night stock charts live. We'll be going live tonight, 6 p.m. Eastern Standard Time. Hit the bell or click just one of the links below. That link to my website at the Contrarian Trader. One gives away a 5-part video tutorial on my 5 top favorite candlestick patterns. That's free. I'm not asking for anything for that. The other is just simply an opt-in email to get alerted 15 minutes to a half hour prior to us going live. So everyone's going to receive a notification of when we go live. Let's kick things off first. Before we do anything, and let's talk about our sponsors over at TrendSpider. They're still celebrating their 3-year anniversary with 30% off. I get an additional 5% off, so 35% discount code below using my link. And please, folks, automate your grunt work. I sound like I have a lisp. Automate your grunt work, speed up your analysis, and improve your accuracy. There's no sense in improving your speed of analysis if you're not improving your accuracy. You must be able to do both at the same time. TrendSpider does that for you. Reduce costly analytical mistakes, find winning chart setups with their scanners, and backtesting. I don't talk about that much. They have backtesting. And time your trades with precision. So TrendSpider, they have a 7-day free trial offer, demo tour. So use that link below. Go check them out. And I give it away free to our silver and gold level members. I believe in it so much. I know these guys that own the place and manage it, great guys, and they'll hold your hand through the entire onboarding process. Let's get to economic data first. There we go. Okay, yesterday we had building permits, which really disappointed, and housing starts, which disappointed as well. Now, you may be saying, it doesn't make sense. Building permits were stronger these past several months. Why would housing starts be weaker? The reason is that simply because you're granted a building permit does not give you the obligation to begin construction. That is within your purview. Also yesterday, we had the Fed chair come out. As per Bob Pisani on CNBC, man, he threaded the needle. He did perfect. That's not what the markets are telling us this morning. And I listened to his entire testimony later on in the day. Folks, inflation, he's acknowledging it. It's coming. Get ready for it. I didn't say hello to everybody. Big Bear, good morning. William, good morning. Sam, top of the morning to you. So, inflation is coming, folks. You could tell by looking no further than what happened to the U.S. dollar. We're going to take a look at the dollar in a moment. And today we have initial jobless claims. Always an important number. Hopefully, out of concern and respect for those folks that are losing their jobs, we see a decline in the number of new jobless claims. It's horrible. We have the Philly Fed manufacturing survey coming out. So an important day. Thursdays have become an important day in terms of economic data since the COVID shutdowns. So let's get to the pre-market activity. And those reports come out. Oh, we have the index of leading economic indicators coming out at 10 a.m. That'll be interesting. So they begin at 8:30, and economic indicators comes out at 10. Charts, pre-markets. Let's do it. All right. This is the one I really want to take a look at. Big rally back overnight. This is the first I'm looking at it. I don't think it's going to hold. We'll take a look tonight on the weekly charts because Thursday Night Stock Charts Live, we review the weekly charts to see how we're poised to close out the week and how we may want to position for next week. And remember, we have the end of the quarter coming up soon, so I may go over some quarterly charts as well. So the dollar is up this morning. Nice rally. I think this is a dead cat bounce rally. Now we're rolling over, having broken a bit of support. This is a 5-minute chart. What am I doing on a 5-minute chart? 4-hour chart, like a man. Yeah, this is a dead cat bounce. So we popped. We'll probably fail here and break to new lower lows in the coming days. Let's take a quick peek at how gold is looking. Gold is up. It was higher. And I did a live stream, a private live stream. It's not posted on YouTube. It's only for members. And I was asked a question about whether we were going to lighten up on shorts. And my response was no, because the knee-jerk reaction was to rip to the upside. We don't know if it's the right reaction. And frankly, we were given on a plate, right? CPI lies, Consumer Price Index lies. We know that it's a bigger inflation number than what the CPI tells us, but we really don't get the full picture. So we have to guesstimate, we have to theorize, hypothesize, we have to sometimes act as conspiracy theorists, but the Federal Reserve is quite open and honest yesterday. Get ready, it's coming, inflation. And of course they lowballed the numbers, but why wouldn't they? Because of course inflation is going to disappear in another 12 months as per them for whatever reason. So gold, yes, rallied yesterday. It has reversed. We are long of the gold miners. We did not go chasing anything yesterday. We want everything to settle out. That's the discipline. Perhaps I will need to stop out of my shorts. That doesn't sound right. But maybe I will. This is a family show, so I apologize if that sounded crude. Maybe I will, but we did not want to respond to the mob reaction. So gold weakening up here. Folks, I think that this is an opportunity. This is going to be a run like you haven't seen. And if you take a look at the miners on seasonality using TrendSpider, we're heading into a period where, here's March, over the past 6 years. And March is usually a very weak month. Forget about February, a nightmare month. But then April hits. The flowers begin to bloom. The grass gets greener. Some areas of the country opening up your pools. And all of a sudden, the seasonality in the gold miners change. Up 67% from April through July. A great, great run. Then we drop off in August, and then we go to hell in a handbasket in the fall. With the exception of December, which has been strong. But for the most part, a rough time of year in the fall. So we're heading into a seasonally strong period of time. And when you take a look at the price action yesterday on the GDXJ, of which we are long, and I plan on buying more very, very soon. Here's the weekly chart, and this is what matters. I don't care about the daily chart. The daily chart is just my timing mechanism for adding to a position. The weekly chart, that's the Pimp Mac Daddy. That tells me, okay, we're at the lower end of a range. We reversed off of that lower end of the range. Now this week we're breaking out. That's a confirmation. Buy signal all day long. 2 trading days left to go in the week. A lot can happen here. So keep that in mind as you're looking at a weekly chart. Let's go back to the pre-market activity. Let's bring up GDXJ. Let's see what it's doing this morning. It may be pulling back with stocks. But I want to thank the good Fed chair for giving us direction. We're pulling back slightly here. To me, this is a buying opportunity. Members, I'm not saying that stocks won't move up higher from here. I'm just saying that, you tell me in one breath that you're not going to raise interest rates until 2023, maybe. Economic growth is going to drop off after a 6.5% surge, which we haven't seen in over 5 years. We haven't seen 3% growth in 5 years yet. You're telling me we're going to get 6.5% growth. I have to question that. You're not going to raise rates, which I'm not going to question, and you're saying that inflation is coming, which I'm not going to question either because I've been saying it live for months. And I'm going to buy stocks? I don't know. I think I'm good with sitting with my short position until the market takes me out. And so what happened today? We wake up after the initial knee-jerk reaction, 15-minute chart. Look at this rip. As a short, if you don't think that hurt, it hurt. I wanted it just to simply drop. But I wasn't going to respond. I wasn't going to act. We held this morning weaker by a 0.5 percentage point. And I may need to stop out. I'm not saying that stocks are not going to go up higher. We have a lot of stimulus heading into the system now. S&P 500 looks like a nightmare right now. We had a dead cat bounce a couple of hours ago begin. It is now ended. Now we are breaking down. And this is a 15-minute chart, which I really don't like to use. I'll leave that to the day traders. But this illustrates a point that we are putting in lower highs and lower lows after the Fed chair's quite ominous press conference. These are 4-hour charts now. NASDAQ 100, absolutely and utterly getting annihilated. Why did they rally yesterday? I have no idea. Yields closed strong. You're going to buy tech stocks simply because yields pulled back from highs that we haven't seen from 2019? Give me a break. Give me a break. Yields closed very strong yesterday. The bond market, we woke up yesterday, the bond market said who's boss. And it's the bond market, not the Federal Reserve. So why anybody chased the NASDAQ 100 yesterday, I have no idea. We remained short. That was a no-brainer. The Dow, I'm surprised here a little bit. You would think that the Dow names would do fairly well. Those are your reflation trades, your cyclical names. If I were forced to make a guess as to why, inflation. It's not good. It's a cancer. It's going to force the Fed's hand. Let's take a look at bonds. That's right, Will. Charts don't lie. This is not live right now. Let me go to the Treasury note. Look at this. Look at this. This is just an assassination of bonds, what you're looking at right now. This is, somebody pressed the sell button last night. Somebody big, very, very big. And for those that are out there thinking that yields and gold can't move up together, that's inaccurate. They can most definitely move up together. All we needed was the dollar to get whacked. And that's exactly what they did. They sacrificed the dollar yesterday. They didn't talk about it, but all you need to do is talk about inflation and it's going to run hot. And I'm not going to do anything about it, by the way. So inflation's going to run hot. I ain't doing anything about it. What's the dollar going to do? When you defend the dollar, you raise rates. So absent that phrase, we're going to defend the dollar, well, you're not going to defend the dollar. Therefore, you're going to dilute it, and you're going to print more money. So yields, I mean, this is the note. So you need to visualize that while this is ultra ugly for bond notes, yields are ripping higher right now. I got to take a look. I don't have my phone in front of me. I take a look. Give me a live number. Bonds. Holy Jesus, man. We got a 1.7 handle on the 10-year yield. Are you kidding me? My price target was 1.72. We are now beyond my price target. Let's visualize this. Bear with me one moment. We're going to talk about this tonight. Again, 6 p.m. Eastern Standard Time. Join us live. I can't wait. This chart does not update real time to reflect yields. So I need to wait for the end of day. I drew this line several weeks ago in red. This marked resistance. And I said, beware. Beware of stocks once we're beyond heading past this resistance level. This is where we closed yesterday. See this little red dot? We're now in the pre-market above my target right here in red. That means that overnight we've gapped up on yields. We do have a lot of resistance above. I'll point that out. But there's no reason why we can't head up now to 1.93. So if you're wondering why the Dow is shaky right now, if you're wondering why the NASDAQ 100 is getting clubbed like a baby seal, if you're wondering why the Russell 2000 is taking it on the chin, look no further than this chart here and the fact that the Fed chair is going to let inflation run hot. The bond market is not going to allow it. So expect in the coming days, because there's one thing that he did not talk about yesterday, and that was yield curve control. They're going to have to do that, but unfortunately, they're going to need a crisis. That crisis is going to be stock market sell-off. We don't have it yet. Let's go back to the pre-market activity. I rarely get surprised, but this, wow. Silver behaving very, very strong. A really good day yesterday. We gave up gains, though. Same thing with gold. You know, I'm not going to come out here and speak my book. We're long of silver. I would love to say that it's time to go running in and buying silver, and it could quite very well. But remember that if we do get a stock market sell-off here, all stocks, even gold and silver, may sell off because we got record high margin debt, and people will sell whatever they can to satisfy those margin calls. So pressure hits everything. In the short term, longer term, you need to be buying silver and gold. I don't like paper silver, and I don't like paper gold. Probably better off with the physical. And I like the gold miners, though. When you buy silver and gold, that preserves your buying power. That takes you out of dollars. You become your own private central bank, and you have that hard metal to preserve that $20 you have in your pocket is going to be worth $20 when you sell that gold in 5-10 years. You're not going to create wealth, though, from it. To create wealth, you need to be long of the miners. They tend to outperform the physical product. And that's why we focus so heavily on the miners. Let's take a look at oil prices. Oil firming up here. So here's your inflation, folks. And he brings out the word. I loved it. He loves, and it's not just him. The Federal Reserve loves to use the word, search this on their document, transient, temporary, fleeting, So what he's saying is that this, because remember, they back out food and energy out of the CPI data. They pretend it's not there. So here is your trend line for oil. We have broken a prior support level. I don't think it's going to hold, though. I should say resistance is not going to hold right here. We broke this prior support level. I think that we are going to head back up here because the dollar is in all probability going to roll over. That'll put a bid. Remember, oil is priced in US dollars. So if the dollar tanks, you'll see oil break out along with gold, and this prior support level will now act as resistance in yellow. What else do I have here? We went over the S&P, went over Dow's. All right, I'm going to take a few chart requests. I want to take a look at nat gas first. That was looking interesting the other day. Was there any follow-through? We had broken out here on a 4-hour chart. We're holding gains. Way too early to make a call on nat gas. But we'll revisit over the course of the next several days. There may be a trade setting up here. I'm not quite sure, though. Too early. All right, let's do some chart requests. I got about 10 minutes to go. And we'll use TrendSpider. Again, folks, use the link below, 35% discount code, TrendSpider, 3-year anniversary. I met these guys when they were first starting out over at the CMT convention, Chartered Market Technicians Convention in Manhattan. Dan and Jake. Dan's the CEO and founder. Jake's a co-founder. Great guys. And we just hit it off. Okay. SQQQ. No. I don't like it. We're short the Qs. So for me to say I like it, it would be a lie. On a monthly chart, so far in the month, we have a bearish reversal bar. Weekly chart, we're down. We showed a little bit of strength yesterday, but I suspect that we're going to weaken up here today. And when you take a look at what happened on a weekly time frame, we had bounced, but we broke support last week. This week, a continuation move lower. Daily chart. We closed up yesterday with an inside bar, but the trend is still down. Yields are rising, so the Qs are heavily weighted towards technology. So you have to love Microsoft. You have to love Apple. Those are the two top components. I don't like either one of them. So we're short of the Qs, and it looks as though these are going to take it on the chin today. Maybe they'll close positive for all I know, right? It doesn't matter where a stock or an ETF trades intraday. What matters is how it closes. So be careful here. Yields are on the rise. They've hit our price target. I don't think they're going to roll over. I only think they're going up higher. And that's not going to bode well for technology. All right, let me take a couple of other. US dollar, Japanese yen. I could do that. I haven't pulled it up in a while. I forgot the symbol. Where's the yen? There it is. Yen's pretty weak, but it looks like it's bottoming. This is bottoming. I think we're forming a W formation. Left side of your W, nasty sell-off, man. Here's your resistance level. Well, look at where we're at on a monthly time frame. We're finding support at historical support. Last time we were here was back in June. Prior to that was back in March. Here we are yet again. I suspect that we're going to rally here. The 4-hour chart is implying that. The monthly chart certainly has a setup there. You have a lot of buyers at where we're trading at current. And the dollar was completely assassinated yesterday. So why not? Japanese yen, I think that you're going to see some bottom hunting done here, and you're going to catch a bid. You're welcome, Will. All right. I could have sworn I have time for one more. TLT. TLT is dead money. You got to avoid it. TLT, I have a price target. I was asked about this yesterday. I'm not sure if it was you, Will, but somebody else asked me for price. Oh no, it was one of. It was Pat asked me for price targets. Look at 131. Where's my phone? I don't have it with me. I don't know what the heck happened to my phone, but I sent an IM yesterday, or text, whatever you call them. 131 and change is support. Then if that fails, you're going to find support at 129 on the TLT. NY Jets, hey. Bob, miners to operate must use oil. Doesn't matter. You got to just keep a, if oil moves up. Remember during the rally, after the dot-com crisis, you had oil prices climbing well over $100. Yet the miners are moving up higher as well. You need the spread for gold to really influence whether or not that's really a major issue. And these gold miners and the silver miners have gotten very lean and very mean over the past several years. Barrick and Newmont in particular, great companies. I prefer to go with the ETFs. All right, we'll leave it off with FNKO. And I got to get my day started here. FNKO. Looking at the monthly chart, we currently have a breakout. We need to close out the month above 1806. Moving averages are heading in the right direction. They're moving up higher. Weekly chart. We have a breakout on the week above that 1806 mark. We got to hold it. Volume is trending in the right direction. Looks good. Daily chart. I think it's breaking out. What I would offer as a suggestion is wait and see how we close out the day here. Do we rally back or do we fail? Do we fade on the day? And watch and see whether or not FNKO has the ability to hold that 1806 mark. I'm not sure what this is, if it's a SPAC or not, or what industry that SPAC is in. But if it's in technology, just be careful. because tech stocks in a rising interest rate environment traditionally do not do well. So beware. I would need to do more research on this fundamentally to see whether or not I would roll the dice as to whether or not this is going to hold support. The charts will tell us. Watch and see how it closes out today. 1806 is your number. Let's make sure it closes above it. And with that, folks, I would... Good morning, Roy. I will... DD, is that the symbol, or are you telling me due diligence? All right, folks. With that, everybody have a very profitable trading day. I know many simply watch the stocks and aggressive growth stocks. Beware. Names in the ARK fund in particular, high beta, you got to be careful of in this environment. So use discretion, and hopefully I'll talk to you tonight, 6 p.m. Eastern Standard Time. Please smash the like button, share with a friend, subscribe to the channel. Again, have a profitable trading day, and be well.